Welcome back to the channel, and in today's video I'm going to be talking about index funds, all things around index funds. If you don't know what they are, this video is for you. I'm going to be explaining index funds. We're going to be talking about, are index funds a good investment? Can index funds make you a millionaire? I'll cut to the chase. Sure they can. In fact, Warren Buffett, one of the most preeminent investors of our time, firmly believes in index funds, and we're going to talk about that here in a little bit. So stay tuned. Stay tuned for that as well. We're going to be talking about index funds versus mutual funds versus ETFs. Are they a better investment than those as well? And everything you need to know about index funds, I'm going to be covering in today's video. If you're brand new here and you've never seen me before, my name is Austin, and I bring you videos pretty much every day having to do with how I can help you make more and do more with your money. Really, that's what I'm after. I want to help you make more money, do more with your money through investing, make money online, you name it. I bring you those types of videos. And so today, again, is all about index funds. Index funds are one of the best investment vehicles that you can do, and they can absolutely impact your financial future. I'm a firm believer in them. I have them myself. And so with that said, we're going to jump into it just a minute. And lastly, please drop a like on this video if you could. It really, really helps my channel out. So with all that said, let's get into it. What are index funds? Okay, so put real simply, index funds are basically just a mutual fund or an ETF that is made up of stocks that track to a particular index. That's really the key. They can either be a mutual or they can be an ETF, but they're made up of stocks that, or investment or bonds or anything like that, and they're keyed really towards an index funds like the S&P 500. That's really it. So they're really built to really track to market average returns, which is something very important we'll talk about here in a little bit. And that's really the main difference, okay? Or that's really what they are. How do they differ versus mutual funds? Well, mutual funds are really built to try to outperform the average market return. Some of them do, some of them don't. We all know that. I own mutual funds as well. I'm sure you may as well. And so, that's really what index funds, they're built to track to a particular index, like the S&P 500 index. Also, one real key thing you need to know is that index funds tend to be cheaper as far as costs, administrative costs, because they're not bought and sold a lot. Things like that. They just have lower, not bought and sold, I apologize, because they're not changing out the stocks, that make up that index fund, then they're not really having to do a lot of management to the index fund, right? So thus it's a lower cost, which is one of the big reasons Warren Buffett really likes it, and a lot of investors like it, because it's a lower cost to be in the fund, say, versus a mutual fund. Then overall, if you own an index fund for a long period of time, 5, 10, 15, 20 years, your reduction of costs, right, is going to, that money can go directly towards obviously putting more money in the fund, things like that, and it compounds over time. It's another reason people really, really like index funds, is because they're cheaper. Okay, so that's the definition of index funds. Again, this is really index funds for beginners or for education purposes, and you really need to know that they are a great investment vehicle. Okay, speaking of that, let me talk real quickly kind of about the three main advantages of index funds. Okay, I got some notes here. I'll make sure I get this right for you. Okay, so many index funds simply hold what's in the index. I've already told you that, right? So they are made up of stocks and maybe bonds or whatever it is, and the stocks and bonds or whatever that makes up the fund rarely changes. So investors can see the funds holding any time, which is really, really good. The second advantage to index funds is the diversification in them. Okay, index funds are made up of a lot of different stocks and different bonds, and let's say that a particular stock or bond that makes up that particular index fund is, or maybe even a group of bonds or stocks that are making up, are not doing well. Well, usually what happens, because of the diversification of the stocks or bonds in that fund, it means like if we have these 5 stocks over here that are not doing well, these 5 over here or more are doing as well or better, which ultimately kind of cancels each other out and helps the fund to do better and do well over time. So because that diversification is there, it really helps minimize your risk, okay? And it helps the fund to perform better over time, and everything kind of evens out, right? That's really what it comes down to. Okay, the third advantage of a index fund is because the composition of an index fund rarely changes. Ultimately, this comes back to expenses. It's cheaper to manage. I've already mentioned this, right? It's cheaper to manage, and so thus you have a lower expense. Those are the 3 main advantages, guys, to index funds. Okay, so what I want to do now is get into some main topics around index funds and kind of talk about maybe, let's do this. Let's talk about right now what is the best index funds that are out there. Now, again, I'm going to say this. I'm going to give you a couple of index funds that you can go look at, but I would tell you, simply put, the best for one person may not be the best for you, okay? It depends on what type of index fund you really are after. There's all different types of index funds, okay? Just like mutual funds, there's all different types of mutual funds. Just like stocks, there's all different types, right? So you need to look at an index fund and look at what its average returns are. Remember that index funds are built to track to market average returns. That's important. So with that said, let's get into it. What are the best index funds? 5 or 6 of the best index funds. And I've got them written down here. I want to make sure I get them right for you. Okay, so the first one is the Fidelity Zero Large Cap Index Fund. Okay, that one's made up of large cap stocks. So these are big stocks, probably like your Amazons and your Apples of the world, right? The second one is the Vanguard SP 500 ETF. Remember, I talked earlier about a index fund could be an ETF or it could be a mutual fund, right? So this index fund, particular one, this Vanguard S&P 500 tracks to the S&P 500, which I really like. I'm a big believer in tracking to the S&P 500. Okay, the second one is the SPDR, and that's SPDR. S&P 500 ETF Trust, again, another ETF, and another one that tracks to the S&P 500. This is a great one. The fourth one is the iShares Core S&P 500, again, tracking to the S&P 500. You're seeing a trend here, right? And the fifth one that I'm going to recommend is the Schwab S&P 500 Index Fund. By the way, I didn't mention this earlier. I need to start mentioning this earlier. This video is for entertainment purposes. I'm not a stockbroker. This is not stock advice. There's a disclaimer below. Before you make any investments in any type of fund, go talk with a licensed professional. Okay? There you go. Moving on, right? Okay. All right, so that was 5 of the best index funds. These funds have been around for a while. You can see that the majority of them were ETFs. I've got a video that I'll link down in the description to talk about ETFs. If you don't really know what ETFs are, it's a whole video down there. You can check it out and see, you can learn more about ETFs. Okay, so can you lose money in an index fund? I get this question all the time. I see this one on the internet a lot. And the answer is, sure, you could lose money in an index fund. The real answer is probably not. Index funds have been around for a long, long time. Remember, they're built to track to the indexes like the S&P 500. They are very stable. They're very conservative. That's why I think index funds are a fantastic investment vehicle. But just like any investment, just like in stocks or mutual funds or whatever, there's always a chance of risk, right? So just know that. But really, index funds are very, 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 very safe. Okay. How do you invest in index funds? Well, simply put, you've got to have a brokerage account. You've got to do that. And then you basically can start investing. Now, if you're looking, if you're going to get like an index, if you're going to get like an index fund that's from a company like Vanguard or Fidelity, you have to open a brokerage account with that particular company. But there are index funds that you can obviously get into that are not, backed by big companies like Fidelity and Vanguard, things like that. And then you basically just buy into the fund. The really cool thing about index funds, by the way, is their cost. You can get into index funds for, some of them are $1. I mean, probably a little bit higher than that, but $100, something like that. You don't have to put up a lot of money to get into index funds. And they are, again, are a really, really, really good investment vehicle. Here's one, and again, I got notes here. Make sure I cover everything I want to do. What is the best time to get into to invest in index funds? Any time is a great time, guys, to invest in index funds. Index funds, again, if you have a more of a passive view towards investments, and passive is you're not actively, managing it, you're not actively trading it, which most people in index funds are not, but look at investing, guys, for the long term, right? 5, 10, 15, 20 plus years. If you look at that and you average out there, how long you're going to be in that fund, it's better to get into it now and then be in it for the long term, right? So any time is good to invest in index funds. Frankly, when the market is down, it's a great time to invest in index funds. Last year, when we had COVID-19 and all that kind of stuff, that was a great time to invest because you can buy in at low, and then that index fund just went back up as the market returned to its average. So what is the average 10-year return for the S&P 500? The average 10-year return for the S&P 500 is 13.6, which is a really good average return. That's why a lot of these index funds are built to track to the S&P 500. So the average return for the last 10 years is almost over 13.5%. Really, really good. Okay. How much should you invest in index funds? Really, it's up to you. It's relative to how much money you want to put. It's relative to the overall, composition and makeup of how and where you've got money invested. Remember, I've talked about this all the time. Start with your 401k because those are pre-tax dollars. Then you might want to get a few mutual funds if you so chose. And then, yes, have some index funds because they have lower expenses and things like that, right? Usually mutual funds have a little bit more, management costs associated with them, right? Maybe have a few index funds, have a couple of, and then by the way, you could get into index funds, and remember, an index fund is also an ETF. I love ETF funds. So you could either have an index fund that is also an ETF, so you kind of kill two birds with one stone there. But it's relative to what your overall investment strategy is, right? And then ultimately, potentially, you may want to be into some individual stocks as well, right? So there you go. That's pretty much how you can do it. But how much it's pretty much up to you, okay? Are there any disadvantages to index funds? I think the disadvantages to index funds are pretty much the disadvantages to any other fund. There is really no downside protection, right? If the market falls apart, your index fund's going to go down. If we have a major, upheaval in the market, kind of like last year with COVID-19, your investment's going to go down. Okay. It is what it is, right? But if you're looking for disadvantages, and by the way, these are kind of disadvantages that could be applied to a mutual fund as well. You have no control over the holdings, but you're going into it eyes wide open. You're buying into that fund with the objective of, hey, I'm buying into this fund because it tracks to the S&P 500 and that these 500 companies that make up the fund. You have no control over, what is in the fund, but again, I always like to bring this up because I always think that you need to know about kind of the pros and cons, right? I love this one. Does Warren Buffett buy index funds? Warren Buffett, I'm a huge fan of his. Obviously, it goes without saying. He says, and I'm quoting, "A low-cost index fund is the most sensible equity investment for the great majority of investors." Basically, he said that in his book, right? But again, a low-cost index fund is the most sensible equity investment for the great majority of investors for a lot of the reasons that I've already mentioned here, guys. Okay, so that's something you should think of. Okay, all right. Do index funds pay dividends? Sure, if there are stocks in the fund that pay dividends. Usually what happens is the dividends are paid into the fund and then allocated accordingly, just like a standard dividend is. Let me see if there's anything else I want to cover. Could you turn 10K into 100K? Sure, it could. It's going to take time, right? If you put $10,000 into an index fund, hey, is that going to turn into 100K? Sure, it is. I mean, it's about, if you look at an index fund that tracks 13%, year over year year over year, compounding interest, things like that. I think it's about how much do you have to invest monthly, annually, right? I think you need to come up with an investment strategy that works for you and kind of go from there, okay? But really, index funds truly are probably one of the fastest ways to become a 100,000-aire, if you so chose, to become a millionaire. And again, Warren Buffett has leveraged them and used them as part of his investment strategies. I think that index funds probably, if you're looking at all of the investments that you could do, are one of the fastest ways to grow and make money in the market if done properly. And I would say, guys, just stick with index funds that track to the S&P 500. Look at potentially ETFs, right? Because they're going to be lower cost as well, just in general. The beauty of ETFs is that you can get in and out of them relatively easily, quickly. They trade daily, things like that. And look at making sure that the overall expenses for the index fund are low compared to, say, mutual funds or things like that. And then go for it, right? But buy and hold and be in it for the long term, guys. It's really important. Be in it for the long term. So I want to wrap up the video there. I hope you've enjoyed this video. This was all about index funds and trying to explain them to you, index funds for beginners, so that you know what index funds are and you know that you can leverage them and they can be part of your overall investment, portfolio. My name's Austin. I'm here for you basically every day, bringing you videos, helping you and showing you how you can do more with your money and put your money to work for yourself and make even more money in the future. That's my objective. Please consider subscribing to the channel. Drop a like on this video. Also, there's been another video that's just appeared on this video. If you want to check that out, that is my ETF video. All things ETF. Check that video out. Until then, take care. God bless, and I'll see you in the next video.